Welcome back to Living in Tahalay. I'm your host, Kevin Cahill, and with me today is Joel Lundberg. Joel is a veteran home mortgage lender. He has been a lender since 2001, and we're going to have a great conversation today. Welcome back to Homes in Greater Seattle. I'm your host, Kevin Cahill, and with me today is Joel Lundberg. Joel is a very experienced home lender, mortgage lender. He has been in the business since 2001. I've got a ton of questions for Joel, and I bet you do too. We're going to have a great conversation today. Welcome back to the Realty Funnels Podcast. I'm your host, Kevin Cahill, and with me today is Joel Lundberg. Joel is a veteran home mortgage lender. He's been a lender since 2001, so he's been through a lot of ups and downs in the real estate market, as we all have. We're going to have a great conversation with Joel today, so let's jump into it. Joel, welcome to the podcast.
Thank you so much, Kevin. Glad to be here.
I'm glad to have you with me, and it's just a great time for us to just jump into a bunch of those questions that a lot of people have about questions about mortgages, interest rates, what's going on in the market. First, I want to just give everyone an opportunity to get a sense of who you are, where you are, and what you do. So go ahead and just give us a little introduction.
Well, thank you. I appreciate that. So my name is Joel Lundberg. I'm a mortgage broker in Puyallup, Washington. I've been a mortgage broker since 2001, just helping as many families as we can buy homes as possible. I've got a team of about 8 people that work with us, and we're just lean and mean, and we love what we do, and we have a great time helping people.
Well, and you've been at it since 2001. So you've been at it during that rise up in the market from really since after 2001, after 9/11, we really started to see a huge run up in the real estate market, but it was really built on the credit market, available credit, affordable interest rates. And then you saw the sort of topping out of the market in 2006 and then bouncing along downhill until it finally bottomed out in September of 2008 when the credit market collapsed. And you've been through it during that entire recovery. It's been quite a whirlwind, hasn't it?
I would say, yes. I remember I personally bought a house in 2007. It was an investment property, no down payment. I wasn't living in there, no income, no asset. I had a pulse, and I was approved with a 720 credit score. So yeah, things are definitely different nowadays than they were then, that's for sure, which is a great thing, actually.
I agree. I mean, the blowing and going market that we were dealing with back in 04, 05, 06, 07, it wasn't necessarily the most beneficial for the entirety of the economy or of the real estate market. And obviously, for many individuals, they got hurt.
Yeah, they did. There was a lot of programs that were out there that were fixed for 2 years. If you got tied up with some lender that maybe wasn't as forthright, a 2-year fixed loan with a 3-year fixed or a 3-year prepayment penalty, those kinds of things were happening. It's just, there was a lot of crazy stuff that was going on. But yeah, I'm just glad those days are behind us for sure.
And I don't think they'll ever return. I don't think we'll ever see anything quite as loosey-goosey as that ever again, which, as somebody who is really concerned for home sellers and home buyers and for people who are trying to grow their wealth through real estate, I really want to see safeguards like that in place.
Yeah, and I think, let's keep our fingers crossed. But yeah, now we have to prove that someone can afford a home, which seems like a novel concept, but we have to prove to the investment world that the buyers and the borrowers that are borrowing all this money can actually pay their loan back, which it seems weird if you're not in the world that we're in, but that was a thing. And things are so much cleaner now too, and the investments that these banks, and if you look at a mortgage, it's an investment to a bank, and when they buy the mortgage, it's such a much better investment for the bank, for them as an investor too. So it's a great time to be in the business, and it's clean and it feels good. The bad players are out. Feels really good, and I'm excited.
I am too. I'm very excited. I see so much potential on the horizon with very practical, very reasonable interest rates, even though they're not as low as they had been. In my opinion, they're still very affordable. They're very reasonable. This is not like credit card debt. This is just a very reasonable investment. And if you have decent credit, you're going to get a decent rate. It may not be as low as we've seen previously, and yet, practically speaking, it's a very reasonable loan cost.
For sure. For sure. Yeah. Historically, we're probably below the historic average right now. A lot of people don't even realize that. They might hear on the news that their rates are up. Their actually rates are down. A lot of people gave up, in the last 2 years. They just gave up because the rates were higher and they still think they're high, but they're not. They've come down quite a bit. So the people that are engaging the market now or re-engaging the market now, they're having a lot of success, and they're kind of surprised to see what the payments might be, even though the values haven't come down a whole lot in the homes. Rates have come down, so affordability is better now than it was, even a year ago, which is great.
And what we're seeing right now is people making wise decisions. They're making very smart financial moves because lenders aren't just going to give anyone a loan. And so they're looking at their long-term situation and deciding, what do I need for my housing? What does my family need? What's the next 4 or 5 years going to look like? And then they just look at it and they say, well, it's obviously better to have an investment in my real estate than to be continuously paying rent, for example.
For sure.
Or if they were perhaps fortunate to buy at a low interest rate period in the market, and now they want to either downsize or they want to buy a larger home. Well, those are decisions that they need to make. And the fact of the matter is, okay, so you had a lower interest rate, then you still have that low interest rate. However, the house doesn't serve you anymore.
Yeah.
Just move on to the next thing and then look at the math and make sure it makes sense. However, with those rates lower now than they were a year ago, they could really make a lot more sense.
Yeah, absolutely. The farther we get away from those crazy COVID rates in the twos, the farther we get past that time, the more normal it'll feel to people. And then the people that still do have those rates in the twos and threes, a lot of people, they've had kids, they've got married, they've had all these life things that happen to all of us. A lot of those people, they're not selling their homes, they're actually converting them to a rentals, go buying another one, and then they're getting positive cash flow on the property that's got the 2% interest rate, and they still own that asset. So it's kind of like the best of both worlds.
I would agree. And if they were looking at long-term wealth, then owning a piece of investment real estate can make a ton of sense. And boy, it
Yep.
could pay off big dividends down the road.
Yep. And it's good to have a plan too. And I always tell my clients too, if you're not going to keep it for at least 2 years as a home, you'd probably be better off renting. If you're going to be moving out of state in 2 years or something like that, it doesn't probably make sense to keep it unless you want to keep it in as an investment. But just coming up with the right plan from the start will help everybody. That's the way I always look at business.
Well, it leads me to one of my questions. Let's say you're somebody who's never purchased a home. You're a first-time home buyer. What should they expect in meeting with a mortgage lender like yourself? What's that first meeting, that first phone call cover?
It's just fun. We have a good time. We just get to know each other. Just kind of bond, and I try to find out what motivates them, what excites them. What would it mean to own a house? A lot of times I hear that they're the first generation that has ever bought a house in their whole entire family. Um, there's a lot of pride that goes into it. But I think more than anything, especially for someone that hasn't owned a house before, just that fear. People are scared. There's a lot of misinformation online. Um, all the AI out there. I mean, it's a really good stuff, but it can take you down some rabbit holes that you don't even know you're going down. And it's so important to have someone that you can trust, that's been in the business a long time, that has your back, I guess if you'd say, and just that we can create a great plan for people. And I'll be the first to tell people if it doesn't make sense, don't buy. But I'd love everyone to own a house. Maybe not now, but maybe tomorrow or maybe the day after, but sooner than later. That's what I would love for people.
Well, for me, since 1993, owning a home has just been really mission critical.
Mm-hmm.
And I became a real estate agent in 1999.
Long time ago.
Many, many home buyers and home sellers ago. And I just love to see people financially better off because they've owned a home. And it's almost universal. I mean, it's very rarely the case that somebody made a mistake in buying a home. Overwhelmingly, It was just a really positive situation. So when you have that first conversation, it's a fun conversation. What do you go over?
We just talk about their goals. If they're young and they don't have kids, are they planning to have kids? I'm talking like a dad to them, or a sister, like a brother to a sister conversation. Just like family. The way I always look at it is, my clients are family. I'm going to treat them like family every time, and I'm going to give them the best advice I can as if they were family. And that's, at the end of the day, that's all you got. You just, but it's fun. It's a good time. It's really a good time to learn about me, learn about the business. I have a lot of passion for financial literacy. I think our communities are really falling short with teaching all this kind of stuff. I talked to a client the other day that didn't even know it was good to have an interest rate that was low on a mortgage and have a good return on a higher interest rate on your return on your investments. She didn't even know that, and she was 24 years old. So it's interesting.
Quite shocking, but it's true. I mean,
Mm-hmm.
A lot of people, you graduate from high school, you graduate from college, you have all of these years and hours in the classroom.
Yeah.
And unless you took an accounting class, you don't necessarily have any school learning about the balance sheet, what your monthly income and your outlays need to look like. It is sad, and there are some really great resources out there for people. And it sounds like when you have that conversation, you're just sort of peeling it back a little bit so that they even start exploring that.
Yeah, we just want people to be comfortable, share their concerns. A lot of times, the wife might have one concern, the husband might have another. I just want it to be an opportunity where they can both come in at the same time and voice their opinions, and I can bring up questions maybe they never thought about, just things like that. And, even down the line, if it's a refinance, because, we always do those for our clients too, once they've owned a home, if it makes sense. But what are they going to do with that money that they save? Are they going to invest it into a 529 plan for their kid who's one? Just come up with a good strategy, just not right now, but something that's going to really serve them well for really the rest of their life. That's the way I look at it.
Well, I look at a home as just an amazing vehicle for stockpiling wealth. It's one of the most tax advantaged places where you could have money accruing.
Yeah.
It's, there are so many different benefits of it. First off, if you're the owner occupant, of course, then you've owned it for 2 years. It's been your primary residence for 2 years out of the last 5 years. Then, of course, any capital gain is going to be very favorably treated. Married couples can deduct up to $500,000 of capital gains. Individuals can deduct $250,000 of capital gains without having to pay tax on that. What an amazing, there's no other vehicle like that.
There's not. I mean, you got to have a place to live. So the way I look at it, are you going to pay your landlord's mortgage, or do you want to pay your own and build your own equity? And because you got to live somewhere, and we're fortunate enough in Washington State where the values have typically gone up, way more than they've gone down. So it's nice to, once you get in, the way I look at it is buying a house, your first one, that's just like your ticket into the game. If you look at it that way, it's a game ticket. And then once you get in, the price of entry is a little bit hard, but once you get in, you're set. You just got to get past that first little tough spot.
One of the things that was interesting in my career, I started as a real estate agent in Cleveland, Ohio. And the Midwest can be very affordable, very nice housing stock, very reasonable prices. I had a lot of relocation people would come to Cleveland. And in particular, I was in Shaker Heights in Cleveland Heights, Ohio. They were blown away by how affordable homes were in Cleveland. And if they were coming from Los Angeles or Seattle, or they took so much wealth out of that home in Los Angeles or California or New York City or Boston, came to Cleveland, and it was like, wow, this is really remarkable. However, I also had a lot of clients who were graduate students at Case Western Reserve University, or they were medical students at university hospitals or the Cleveland Clinic, and they were renting, and it was a very affordable place for them to rent. But then if they bought, they were only enjoying the appreciation of the Cleveland market.
Yeah.
But if you're in Seattle, if you're in Palo Alto, if you're in one of these large cities that has a lot of growth, a lot of technology, a lot of forward-looking investment companies, AI, oh my goodness, you're riding that wave.
Yeah. Yeah. It's interesting. It is interesting. It's but the price of entry is tough, but once you get in, everything is easier, and you can leverage the equity. If you do decide to keep it long term, you can leverage the equity to buy more. That's what I did. And my first house I bought was, '03, I think. And a few years after I bought it, I did a cash out refinance, took my down payment, bought another house, several months later. And then I've done that, probably 3 or 4 times, and I've not actually sold one of the homes that I've purchased. So that's I've built my wealth, over a time period just by having that strategy alone. And I love talking about that kind of stuff to our people.
I do too. And I think that if you play the long game and you have smart advisors who can help you, there are some amazing paths to wealth through residential real estate that are very difficult to accomplish any other way. But most people who created enormous, generational wealth did so through real estate.
They did. Yeah, they did. And you can leverage it, which, you can't leverage, a lot of other investments. And it's just I could talk about how great real estate is, because there's not an investment tool out there that really rivals it.
Well, and I think that if people who are looking at increasing wealth have a mortgage lender like you, then it's just another tool in their toolbox for achieving that wealth. And I agree with you. I've always described real estate as the most able of investments because it is leverageable. It is mortgageable. It is improvable. I don't care how much stock you have in any of the Fortune 500 companies. You can't go down to Home Depot or Lowe's and make your stock better.
I love that. That's great. I'm going to use that one.
What's so great is, and this is one of the funniest things about how my wife, Lisa, is, we'll be out driving around and she'll say, hey, let's pull into Lowe's. I want to see what they have in the tile department. I'm like, okay, but we don't need tile. But if she finds great tile on clearance, and we've done this multiple times in the past, she's like, look at this, Kevin. It's like 49 cents a square foot, and it's gorgeous gray tile. I love it. How much tile do you think is on that pallet? And I'll measure it out, and I say, this is about 1,700 square feet of tile. And she says, let's go find a home. So we'll buy the tile first. And then we will call our tile guy and see if he's available. How soon is he available to take on a small, not a terribly small job, but, 1,600 square foot home. Hey, how quickly can you get over? He's like, oh, I've got this one job, and then I've got a couple of small jobs, but I could fit you in probably in about 3 weeks. I'm like, perfect. Then we go out and find a fixer-upper.
I love it. I love it. I got a funny story too. I read some book when I was younger. I can't remember the guy's name, but it was some financial guru, and he had this thing he called the Dirty 30. And it was, go drive around your neighborhood, pick the 30th, ugliest, dirtiest homes closest to your home, and then, go back to your office or go back to your house. And, it's easy to do that now.
So easy
But
now.
but find out who the owner is, get their phone number if you can, call them if you can, and then just say, look, I'm trying to invest in properties for my family. And I did that multiple times, and I was shocked at how many people actually were receptive to taking my call and talking about selling their home to me. I remember one guy, his house was just a mess, and he was so proud that we called him. It was funny, and the whole idea was, your house just fit our needs, but he was so excited that we called him and we were interested in buying his house. It's pretty funny.
Lisa and I've done that too. We know where we want to buy homes. We want them to be within a certain radius, so
Mhm.
that it's easy to go over and improve the house. It's easy to go over and deal with it as a rental. And
Yep.
yeah, those people, they may not have a lawn sign out front, but they're thinking of selling. And
Yeah.
if you've got somebody like a lender like you at the ready to help those people complete that purchase, that could be really game changing in
Yeah.
terms of both you're helping those people get out of a home that they no longer need, but then you're renovating that home, improving the
Yeah.
neighborhood,
Yep.
improving the value of that specific home, but also lifting up everybody else around it, because we all know who the eyesore is in the neighborhood.
Right.
And if you're the one Lisa and I, we had this, we were in Florida for a long time, and in particular in an area called Treasure Island, Florida.
Okay.
And we just kept buying the train wrecks. We kept buying the biggest messes possible. They had all sorts of, city code violations, and we knew all the people in the building department. And we were so good to deal with that we'd get calls from the building department. Hey, we just had a guy come in. He's got all these violations, doesn't know what to do. I don't know, Kevin, if you and Lisa are in the market right now, but we told them that they should call you.
It's
How
amazing.
how good is that when you're doing such a great job of improving the neighborhood that the city building department is recommending you as the investor to take on a train wreck, but you know that those are some of the best opportunities.
Oh, they are. And having, like a good agent, for example, that knows how to see that, how to take that first step, how to identify them. Having a good agent is so important too. Yeah, and the pre-approval, from my perspective, you got to get pre-approved so you can see it to finish once you start. But having a good agent like yourself, it's super important, Kevin, and especially if having one that's got the experience and personally as an investor, that says a lot.
Well, I think that it's been really a part of our success as real estate investors and just real estate agents that we have that team.
Mhm.
For example, you're my go-to lender here, and you've got uh, all the tools that a borrower would need, but then I can put them in touch with the home inspectors and the plumbers and the electricians
Yep.
and all these people who will take my call and sort of put my clients ahead of other opportunities that might be
Yep.
sitting there on their to-do list. It really is mission critical if you're investing for certain, but also if you're just a first-time home buyer or you're somebody who's moving up or moving down in size. You want to have somebody who knows the market, knows what is going on with regard to improving a property and how does that really increase the value. Should we do this or does it matter if we do this? And no, that doesn't matter. Okay, great, Kevin,
Yeah.
thank you. Because that really can be a game changer between a property that is a phenomenal investment and one that's only so-so.
Yeah. I think you do have to have a good team around you that you trust. Everybody from start to finish too. And I know some people, they take advice from, their uncle in Minneapolis or something that about the market over here in Washington State. And what they should do, and which is good. I mean, you want to get the advice from all those people too, but sometimes when you have too many people giving people advice, people just end up getting confused and they end up not buying because they get frustrated, and that's the last thing we want. So just having a good team in your corner is so crucial for sure.
I agree. And when in particular in Washington State, there are the various closing costs that are different than in other states. And you need to be bearing that in mind as well. And just having your eyes wide open when you're walking into a home purchase. I really think that having the right lender, the right title company, the right home inspector, and of course, the right real estate agent can really make a huge difference, so that you're making a really positive change for your own future and for that of your family.
Yeah. And it should be fun too. I mean, I joke, but it's not every day that people spend $500,000. So I can understand why you'd be nervous. If you weren't nervous, I'd probably be nervous for you. But yeah, I mean, I just kind of laid out there, like, what are you concerned about? Let's talk it through. Let's talk it through, because that $500,000, that's a big number, or more, a lot of times, and so are the monthly payments that people are paying on houses these days, but they're paying a ton on rent too. So it's just having that good conversation and kind of just talking about their concerns and just figuring out, can we get around it? Are they comfortable with it, or are they not? If someone doesn't want to buy a house, if they're just too uncomfortable, that's the last thing I want to do is, get somebody in a home and they, 2 months later, they regret it and they don't think they can afford that. That's the last thing that any of us want.
I've had so many circumstances like that where, back in 2004, people were getting pre-approval letters that I thought were like a bit outrageous. And I'm sure you saw that happening in the industry as well. I had a school teacher and a nurse, and they were in Shaker Heights, Ohio, and they had a pre-approval letter for like $480,000. And I was thinking, school teacher, nurse, 480, that seems a bit high.
Yeah.
And I said, do you know what your monthly payment would be? And they're like, no one ever talked about that. And I said, well, let me just pull out my little Texas Instruments calculator and tell you that your payment would be boom. And they're like, whoa. And I ended up selling them a fantastic home for $180,000 in Shaker Heights. They were perfectly comfortable and fine with that. I don't want anybody to make a financial mistake. And, they need to just look at the full picture.
Yeah, they do. And, sometimes when you buy a house, you do have to sacrifice a little bit. If you're used to going out to dinner every night and, just some of those things, you might be spending, less time at the movie theater and in the restaurants and more time with a paintbrush in your hand, and that's fun. That's how relationships get built right there.
Yep. I had clients who taught their daughters every stroke of the paintbrush is like $1. So you're increasing your wealth by $1 every time you take that paintbrush to that wall. And it's true.
I love that.
Well, Joel, we could talk all day about this. I want to give everyone an opportunity to connect with you directly. What's the website that people should go to?
So it's wavelending.com. There you go. Great. Thank you. Yep.
Wavelending.com. And if they want to send you an email?
They could email me directly at Joel, Joel, at wavelending.com.
Okay, wonderful. And how about your phone number?
It's my cell phone is probably the best. I always have it on me, and my calculator. 253-312-0235.
Joel Lundberg, Wave Lending. This has been a great conversation, and I feel like it's just the beginning of many conversations that we will have together.
I really appreciate you having me on. This is a lot of fun.
It's been my pleasure. I really enjoyed having a conversation with you. Thank you so much for being on the podcast, and let's definitely get together for another one soon.
That sounds great. I appreciate it, Kevin. Have a good day.
You too, Joel. Thanks.
Thanks.